Home prices had a strong week and inventory picked up before the holiday weekend. The fall markets are shaping up pretty much just as we've been discussing lately. It's rapidly turning into a normal or normally hot housing market. Each week, Altos Research tracks every home for sale in the country, all the pricing, supply and demand, all the changes in that data. We make it available to you before you see it in the traditional data channels. So let's see what the data says for the week of Labor Day, September 6th, 2021. The median price of a single family home in the US this week is $389,000. That's unchanged for this week and basically unchanged for the last several weeks. It's the end of summer now and prices are typically stable from here until November. The median price of the newly listed cohort, that's the new properties that came to market this week, bumped up to $358,000. That's actually a good sign, indicating continued demand by buyers, but it's not actually unusual for this time of year. You can see the lighter line here has a lot more noise each week as a week might be influenced by weather or by holidays, that kind of thing. So this will probably tick down this week again, as with the holiday data, as we have fewer new listings come to market. All in all, it looks like a normal late summer housing market. It's terrific to see after the craziness we had at the beginning of the year. If we map out the annual home price gains, it looks like this. The dark line here is this year. Each plot is prices over the same week the year earlier. And home prices in the US are currently 10% higher than last year at this time when demand was skyrocketing. You might notice the media headlines right now are still higher than 10% because they're comparing earlier in the year when the transactions that are happening, that we're getting the data for the transactions that were happening earlier in the year. So you can see how it was higher, and now it's coming back into a more normal range. At the end of the summer last year, the median home price had peaked for the year at $350,000 or so. Now with supply and demand a bit more stabilized, finally, that the unsustainable 20% gains earlier from this year are behind us. So you can see that peak, and that crazy peak in April and May of this year. So that was when we were comparing to the pandemic start of where we had a few weeks of actually down market in 2020. The lighter red line here is the path for last year. So you can see that the dip in April of last year. And then we ended 2020 at 11% home price gains. So we're aiming for about that same level this year. By the way, this Thursday, September 9th, at 10 a.m. Pacific is our full hour-long webinar where we dive into all the details, all the leading indicators. We have time to really explore what we can already see in the data for the fall and winter housing market. We have tons of signals to explore, so join us. The registration for that webinar is now open. There is a link in the description below. Spots are filling up quickly. So we limit that to about 500 participants. So if you are interested in all the data, click on the link in the description below to register. That's this Thursday, September 9th at 10 a.m. Inventory rose a little bit this week, 1.4% to 437,000 single-family homes unsold on the market. We'll bounce around this level for 5 or 6 more weeks, and then inventory really starts to decline in October. Our whole inventory curve has been shifted later by a month or two this year. So later, we didn't bottom until April. We didn't peak until late in August. So maybe we don't start a decline until later in November. But we'll bounce around this level. Probably down in this coming week's report due to the holiday, and then maybe back up. But this is probably the peak here of 440,000 single family homes. If inventory starts to climb to say 500,000 before we hit the fall, that'd be a signal that maybe there are forces like the end of the forbearance process or the end of other economic stimulus like unemployment that then is being felt by home buyers or homeowners. And they're choosing to sell. But at this point, there's no sign of that. We're watching vigilantly, and you can be sure we will report it here if we see any sign. Our immediate sales tracker, where we can wrap up today, shows that the total volume of new listings is ticking down as expected for this time of year, but the relative demand level is not abating at all. 24% of the homes that hit the market this week, they went into contract essentially immediately. That's 22,000 out of 92,000 or so. Proportionally, that's the same as it's been for several months. This shows us that even if there is economic hardship that forces, maybe a few thousand Americans to sell their home and capture that cash equity, there is still a ton of buyers right there waiting. In fact, I suspect that if some unseasonal supply were to come out, we'd be in a supply creates its own demand scenario. That is, there's a ton of cash just waiting for any sign of opportunity in the real estate market. And so if that supply happens, those people jump in for the opportunity. That means the transactions would be unusually high, but it also means there's a floor on pricing. There's plenty of demand to happen. We haven't seen, for example, any real increase in market time or other demand signals that might indicate a weakening of demand. So that's all the time we have for today. All the leading indicators of pricing is still holding up well into the fall. The market is normalizing. And so don't forget to join us this Thursday, September 9th at 10 a.m. Pacific for our hour-long webinar where we can go into all the details, all the leading indicators, all the supply and demand factors that drive. And we'll also have time to look at the local markets too. So there is a link to register for that webinar in the description below. If you are a real estate professional and you have clients who need to understand what's happening in this crazy market, you should definitely join us to be ready for the fall. Register for that webinar below. Okay, that's all the time we have for this week. See you next week.